Okay, so we are here tonight. This is REIA, and we're here tonight with Dominic Pizzi. Pizzi, is that how you spell it? Dominic?
Yeah, that's how you say it, Pizzi.
Okay,
Yeah,
Pizzi.
Peasy.
Hi,
All
Dominic.
right, easy peasy. So, what we're going to do is we're going to start off with a group question while people kind of come in. I have told people to go ahead and put their information into the chat. And if you are joining us on YouTube, please remember to like and subscribe. That would be awesome so that you can get the latest videos and you can also get the information. So our question tonight for us to discuss that Rick has is, do you have any immediate disqualifiers or standards when screening rental applicants, either written or unwritten criteria when vetting an applicant? Anything that's like an immediate disqualifier he has on here. But it could also be something, you know, over time that you've experienced, like maybe they're not cooperative, maybe they start bad mouthing their last landlord. You know. I mean, maybe they're living with family and it's their first home. Maybe it's and I'm throwing things out there because these aren't disqualifiers for us, but they're at least the things that make us say, you know, make us ask more questions and talk. Maybe it's a new relationship and they're not married and they're just starting out living in their first home. Maybe they have 3 or more dogs or cats or other animals. You know, so anybody have some things to add to that?
I do. I have one. If I can speak, I'm sorry, my voice is
tonight, so I've been trying to stay away from him. This is the closest we've gotten on Zoom. So,
so the one that says, will you take a payment plan for the security deposit?
Yeah. We don't do that.
No, it's like a sorry, you know, offsides, not interested, that kind of thing.
Yeah.
The other one we do a lot of the shared rentals. So there's a lot of people that are interested in some of our midterm rentals that share a bedroom. And one of them is definitely criticizing the landlord. That's a concern because it's just not representative, you know, especially if they're not reading the ad. Like it says, like, we don't allow pets, and they say, well, I have a little poodle or something like that. It's like, come on, you're not following the directions or not reading the ad. That kind of
That's the majority of people though. So we just have to go with it and talk to them and listen. But so anybody else want to add to that? Any other disqualifiers that you guys want to add? Okay, well, if that's the case, we are going to go on. Oh, go ahead, JRH. What is your name?
JR is fine.
JR. Okay.
Yeah.
Got it. All right, JR. What would you like to add?
I did hear you say the applicants that bash their previous landlords. I've had a lot of that. If they come in and they're just like, okay, well, my landlord, I was in court with him and he's just so terrible. Oh my God. And he didn't fix this, he didn't fix that, and I didn't pay the rent. And can you believe this? You know, I get a lot of those, and I listen, and then I just say, okay, well, you know what, the application's there, you can go fill it out if you would like. But that's an automatic no.
Right. Same here.
Now, JR, are you in Florida or Virginia? Or are you
I'm actually neither. I'm somewhere else. I'm in PA.
Pennsylvania.
Pennsylvania. Gotcha. Very cool. We get people from all over. Actually, we've had people even internationally. We've had people from Spain and South America and all kinds of things. So it's quite fun.
Very cool.
All right.
Yeah, if they've ever been to court, that's an immediate offsides.
You don't rent to anyone with evictions or rental judgments. Yeah. So. Okay, well, that's good to talk about. Well, we don't want to go too long, so we wanted to just have that kind of as an opening question thing as a starter. So now we're going to go ahead and I'm going to introduce myself. There's still people coming in, but that's okay. Introduce myself and Rick, and then we're going to go and introduce Dominic. And I'm going to go through a couple things here where we're sharing our screen. So like I said, if you're joining us on YouTube, please remember to like and subscribe, and we would love to have you join us even in person. And in person, the people, make sure that if you want to share your information, you're putting that in the chat for everyone to see. So, all right, I am going to go ahead and share my screen. Okay, so like I said, this is the REIA. And the group leaders, so I'm Anna Jenkins, and then we have Rick Banez, who Rick is a little sick tonight, but he's a little froggy. And so we actually own, I have my broker's license in both Virginia and in Florida, and that's why we do both. So we go back and forth. We have properties in both states. We do short, mid, and long-term rentals. So our mid and long-term rentals are in Virginia, and we have short-term rentals in Florida on both sides of the state. And we also, though, we have our sales and property management brokerage in Virginia. And so we have an amazing team there that helps people with buying and selling homes and also investing, renting, and property management. And we started out, I was in my 20s and I had a duplex that I turned into a triplex. So our main thing is house hacking, whether we're hacking up a house for more cash flow or whether we've lived with people over the years as roommates and things to hack that or hacking parts of the house. And so now we are roommate free. So Rick, would you like to add anything else?
Well, I like having roommates because they pay my mortgage.
Understand.
And allow me to take cruises. So yeah, I'm totally a believer.
Right. We like
Sorry,
that.
I can't talk very
Definitely.
well.
All right, so we do want to say a disclaimer. The topics discussed here are for general real estate educational purposes only. They are not considered investment advice. We are like real estate brokers, but it's not in that avenue right now. So definitely do your own research and always seek individualized expert advice. Talk to an attorney, an accountant, investment professional, or anybody else that you might need to talk with. All right, we are also a national REIA member, and so you could be a member too. We probably have the cheapest REIA benefits around. So for $70 a year, you do get access to those benefits. You have access to the online education. You've got access to all the different discounts that they offer. And if you would like any more information about that, you can contact us directly. All right, so tonight we do have Dominic, and then we're not having anything on, we don't have the networking this month because it would fall on Thanksgiving, so we're not going to do that, and we normally take December off for Christmas because it's just a little crazy between Thanksgiving and Christmas. So we will be seeing you again in January, and our January speaker is Naya. We realized we had her on about 5 years ago. Can't believe we've been doing this for a while. So it's been a little while, and it figured out is a good time to talk about subject to investing again. So we are going to be talking about that in January. And so hopefully you can join us for that. So Rick, do you want to go ahead and introduce Dominic, or would you like me to?
Could you?
I will. All right. I figured. So Dominic go ahead and mute yourself there. Dominic is a mortgage industry professional who's committed to helping his clients. He is an account executive at BrrrrLoans. That is the name of their company. He graduated from, oh my Lord, Dominic, where'd you graduate from?
This one's gonna be a mouthful, I promise. It's Misericordia University.
It looks like it sounds easier when you say it.
Oh yeah, I know.
Misericordia University in Pennsylvania. Maybe JR knows where that is. So he had a Bachelor of Science and a Master's of Business Administration, and he specialized in business administration. So he didn't start with real estate, but he is now loving it, and it's his dream job now, and he has another team that is with him. So I will put his information in the chat, and so that we have that there. And so Dominic, go ahead and take it away. I will make sure that you can share your screen if you need to.
I actually don't need to.
Okay.
I appreciate just you guys having me on and allowing me to chat. I really just wanted to kind of outline exactly what we can do as far as helping investors out with their real estate investment journey. Specifically on any kind of DSCR loans or some BRRRR strategy, fix and flip style loans as well. So I can outline, kind of just about me a little bit. I didn't start in this space, not what I went to school for. I actually went to school to be a physical therapist. and didn't like it. I actually fell into this position through a little bit of good luck and good fortune. My father and one of the co-founders of the company, Joel Kraut, have been very good friends for about 20 to 25 years. And he kind of gave me, and his son, Aaron, who is also the CEO of the company, kind of gave me a tryout, I guess, in a sense, right? Try it out, see how it goes. And if you like it, fantastic. If you don't, no worries, not too big of a deal. And I've been with the company for about a year now. From then. So definitely some good news in that department, but certainly not the path that I chose originally. But you know, sometimes where you're supposed to be might not be, you know, where you think you're going to be 3 to 5 years prior, right? So let me outline a little bit about the company itself. So we're a private direct lender. We're based out of New Jersey, but we lend all over the country, close in pretty much every state. There's only 4 that we can't really touch, and it's really just because they have stricter lender laws. The Dakotas, Utah, and Vermont are the ones that we can't really do. Our 2 primary product sets. So we have the DSCR loans, and I can outline a little bit of exactly what that kind of structure would look like. And we also have some fix and flip or BRRRR strategy style loans as well, hence the name BrrrrLoans.
So Dominic,
yeah.
So why don't you go ahead and explain what a DSCR loan is, or maybe you're going to do that when you're talking. So I wanted you guys to come on because I wanted people to know about different options now that we have some pretty tight financing and things that are happening, but not everybody knows what a DSCR loan is, especially if they're new investors or something. So if you could explain, that'd be great.
Yeah, absolutely. So a debt service coverage ratio loan is a different way of qualifying a property outside of conventional financing. So a typical conventional financing lender would look at things like a W-2, tax returns, any kind of income verification. We're not going to do that in that sense. The only things that we're really going to take into account would be a borrower's FICO score just on a personal level, and we'll take the mid score of all 3 of the bureaus, and then basically just taking a look at how well the property cash flows. And when I say that, I really just mean what the rental income on the property would be as compared to its costs. And its cost would be principal, interest, and taxes and insurance, and any HOA fees associated with the property. So you can do this for single family properties, 2 to 4 units, upwards of 5 to 10 plus multifamilies, and then also some condos and townhouses as well. But these are really just for rent ready properties. So properties that you could, you know, close a loan on tomorrow and, you know, start that cash flowing process right away. Doesn't have to be tenant occupied in that sense. You know, it's always a benefit to have a tenant occupied property when you're purchasing one, just for the mere fact that you don't have to go out and look for a tenant immediately. But there's pros and cons to that too, because you're kind of bound to the tenant purchasing the property. So in that sense, a DSCR loan is just, it gets a different creative financing tool that you can use in your back pocket. So I can kind of outline as well, and if anybody has questions at any time, I'd be more than happy to answer anything as well. I can outline the BRRRR strategy as well. We can kind of transition into that. I know a lot of, and I don't know if we have some seasoned vets in here, if we have some first-time investors, people that are just looking for some general information. Is it kind of a mix of both, Anna?
It's kind of mixed.
Okay.
So if you talk about those different items, the BRRRR strategy and the fix and flip, we've actually had some people that specialize in BRRRR and they've talked with us too before. So yeah, if you could do that, that would be great.
Yeah, absolutely. So the BRRRR strategy is fairly reasonable for, you know, the first-time investor, the seasoned vet that has done this countless times, right? You're basically buying a property that you know will need a little bit of renovation in order to get it up to speed. So if no one is really familiar with the BRRRR acronym, it's buy, renovate, or rehab, rent the property after the renovations are completed, refinance the property through a cash-out refinance, and then repeat. So kind of just continuing that process over and over again, you know, as you see fit in order to create and develop your own real estate portfolio. in that scenario, right, you would be looking for a property that, you know, you could get under contract that you know would need X amount of dollars in renovation work. With a loan structure like ours, what you would do is renovate the property, and then once all the renovations are completed, you would then try to rent out the property and stabilize the property with new updated fair market rents, hopefully that you would be able to get through those renovations. And then what you would do in order to try and get yourself into a longer term option, you could do that one of two ways, either the conventional financing route, or you can do it through the DSCR route. The beauty of the DSCR route is that those loans don't show up on your credit report. And kind of as a precursor to what we discussed before, they're only looking at the cash flows of the property, as opposed to that DTI, the W-2 income tax returns, not really looking at all of that. So we're trying to get the property stabilized with a long-term loan or mortgage, so usually a 30-year term in that scenario. And then the long-term goal out of that refinance is to be able to pull enough equity out of the property that you'll be able to repeat the process if you were to go and purchase another property and do the same thing over again.
All right. So do you, oh, I've got to let people in. Hold on. So sorry, I'm letting other people in here too. Normally Rick
okay.
does the
That's
questions and things like that, and I do the administrative things. So
That's
but he's a
okay.
little sick tonight. I've got some other people joining too. So I mean, the different loans and strategies that you have, so you've talked about all of your programs and things you have.
Yeah, so outside of those two things too, we do a little bit of ground up construction as well. So just for people that have previous experiences in that regard. So we really do have a mix of everything for the rent ready loans, through the ones that need renovation, and then ones that you're literally just starting from the ground up.
Gotcha. So do you have any other experiences with the way this market is working that you would want to share about, and how it's working with your different programs that you have?
Yeah, so I mean, I see a lot of people nowadays, they're doing a lot of refinances. And the first thing that people kind of mention is how high the interest rates are. Yes, I understand, everybody gets that the interest rates are a lot higher than they were during COVID. They're 2.5%, maybe 3.5% during that time frame. And now conventional mortgage rates are probably around the 8% mark. On the private side, it's on the higher 8s, maybe the low 9s. I completely understand that rationale of thinking, but we have to kind of, I guess, look past the interest rate conversation sometimes, right? If your property is cash flowing well at an 8.5% interest rate, chances are that it's going to cash flow even better at a 5% interest rate. If it makes sense to do what you're looking to do now, pull that equity out of the property, or purchase a property rather, right? Because there's a flip side to it. If you are, let's say looking to purchase a property that is at 8.5% interest rate on a DSCR loan, there could be a chance that that property might not be there in 30 days because somebody else is trying to come in and do the exact same thing as you. So I just kind of want to, I guess, tailor that conversation to, we have to get past the interest rate thinking. I know it's a big portion of, looking at the numbers and all that stuff, but it shouldn't be your primary focus.
So Dominic, when you're evaluating somebody who has a property, what are the steps that you have them go through?
Yeah, so that's a good question too. So the easiest way that I guess somebody could come to us with a prospective property, and usually what they would do is either email me, give me a call, or they can go on our website and just enter in all the information on the property itself. What we would do is kind of underwrite the deal from an economic standpoint right from the beginning. Does the property cash flow well with its current rental rates or what its projected fair market rents will be? On a renovation style loan, is the amount of renovation going to be necessary in order to achieve the after repair value that somebody's looking to get? So that's kind of that step one factor right? And there's a couple of different like distinguishers of exactly what you're looking for in a prospective borrower, right? So, you know, first-time borrowers looking for somebody who has good credit, so somebody that has a 700 mid score, you know, somebody that isn't going to go too crazy, at least on a renovation project. You know, we don't want somebody losing their shirt by going into a project that, you know, they're purchasing a property for 50,000, they're putting $150,000 worth of work into. Want to kind of just ease into the process in that regard. And then, you know, there's a couple different other outliers as well. But it's really just specific to a certain property or situation in that sense.
So there was a question in the chat from Michael Connell. Do you offer small multifamily loans, like 5 to 10 units, like for commercial properties?
Yeah, absolutely. So we do 5 to 10 units on the DSCR side. We also do some mixed use properties as well. The residential square footage on the mixed use has to be higher than the commercial. So it has to be a 51 to 49% split within the residential side of the mixed use. But yeah, we can certainly do that, those 5 to 10 units in mixed use as well. Is there any other questions that I might have been missing?
I was just looking in the chat. Does someone like to ask a question that's not in the chat?
So the question I have, Dominic, when you're, since you're doing this almost nationwide, 48 states, we talked about at the very beginning of the call, qualifiers that landlords use to vet prospective tenants. I'm sure you're doing it in your line of work as well. When somebody like me who you don't know comes to you, what are some of the things that you're looking for to make sure the candidate is qualified to take it to the next step? I mean,
yeah, I 100% understand the question there. So, I mean, a lot of this business is about relationship building, right? It's about developing a rapport between, you know, a loan officer, and not even just for my company, it's for any company, right? Any private lender that you're going to use or conventional financing you're going to use, it's about developing that rapport. And it's more so about some honesty, I guess, in that sense, right? We can't help you if you can't, you know, be honest with us in that sense. So, and what I mean by that is, and I can give you plenty of examples in this scenario where I've had people say that their credit score is fantastic, it's 750 plus. I need the best terms on their loan, and then when you go to pull their credit, it's at a 580. Like it's not a good scenario for anybody to want to be in, because then you have to deny somebody a loan. We would rather be in the scenario where you tell us, hey, my credit is X, it might be at 600. Let's see how we can help you, right? And as opposed to going the other way and saying, you know, oh, it's fantastic, and then, you know, it's going the other way backwards. We'd rather give somebody the tools to be able to be successful, as opposed to just deny somebody and then just start moving on. That's not really what we're here to do. We're here to help.
no, I totally can relate to what you're saying, because I'm when I'm screening tenants, like you're screening lend people who want to borrow money, I go through the same process of it's all going to come out in the wash eventually, you know, whether I'm collecting your bank statements, or in this case, a credit, you know, pulling your credit and things like that. So, you know, if you don't know, that's fair too, but it's eventually going to come out. I'm just trying to save us some time.
Yeah, that's really what it comes down to, right? You want to save everybody some time, and ultimately you want to save people money too in that fact. We're wasting time, then we're wasting money. I think, you know, it will continuously go back to that honesty factor. If you are straightforward about what you want to accomplish, and here is the set of parameters that I'm currently in, but this is where I want to be in the future, then let's help you. It's more so that, as opposed to just kind of like a drop and run.
Quickly, can you turn a loan if I'm a new client of yours?
What was the first half of the question, Rick? I'm sorry, I missed that one.
I'm sorry, I shouldn't be speaking. How quickly can you process a loan from beginning to end?
Yeah, good question there too. So, I mean, we've closed loans in less than 2 weeks. Our bread and butter area is between the 21 and 28 day mark. So, if you have a contract for 30 days, we should be more than able to get it done during that time frame. There are some things that, we would ask our borrowers at least to be prepared for right from the beginning, so that this way we can try and minimize that time frame as much as possible. Get 2 months of your bank statements together, get all of your entity documents together. Your EINs, your operating agreements, your certificate of formation, all of that good stuff. Have it all in one place. Keep yourself organized in that sense. Any kind of property information. You're trying to refinance, great. You need a lease agreement. Can you provide and show rent proof? If the answer is yes, then great. If you can't, then we have to see how we can figure out how that we can show that, to show that there's actually a tenant living in the property and it's not just kind of like a sham lease agreement. There's ways that you can certainly decrease that time frame. Usually that 21 to 28 day mark though is a good generalized time frame of getting a loan completed from start to finish.
Great. So where do you see the interest rates in our market going? Do you have an idea or thought by what you're seeing every day? Or
yeah, I mean, I hate being the one that talks in absolutes. I don't want to say, yeah, this is absolutely going to happen or this isn't going to happen.
We don't have crystal balls, so
yeah. So we're living in a unprecedented time where things have changed very rapidly over the last 3 years. If we are, staying stagnant as to what the Fed is trying to accomplish, then there's a possibility that rates may come down at least over the next year. Does that mean though that the supply or the demand of properties out there might not change? Nobody really knows, because the demand for the properties that are currently out on the market is very high, but the supply is low. So you don't really know exactly what is going to happen in that regard. Is demand going to stay where it's at? Is more supply going to come on the market? I don't know. I feel as though, and this is just my opinion, but there's a lot of people that would rather live in on a house or a property that they are unhappy with at a 2.5% to 3% interest rate, as opposed to move into a property that they would be much happier in with a 7.5% to 8% interest rate. That's just kind of like the nature of what's going on right now. But yeah, to fully answer your question, I can't really foresee anything. It would be hard to kind of get a guesstimate of exactly what would happen. I mean, everybody hopes that the interest rates will go down. I just don't know how or when that time frame would kind of occur.
There's a lot of factors that go into that are out of our control and that we don't even know. I mean, with things happening in the world and things happening with our own politics and just things happening and all these different types of outside factors. So
absolutely,
that's the thing. So we don't know. We don't have crystal balls, but it's good to hear different people's opinions about it. So a couple questions in here is, do you look at the debt to income ratio on an individual when you're qualifying them?
Yeah, good question. So no DTI, we don't take a look at that. The only things that we're really going to take into account when we're looking at any kind of DSCR loan or fix and flip style loan will just be those variables that we discussed in the beginning. So FICO score, how well the property cash flows, and then essentially just making sure that the borrower would have enough money to be able to make their payments, or to be able to fully fund the loan in a sense from a reserves or liquidity standpoint. So DTI does not come into effect with any of our loans. And I think you're
another question that I have. Sorry, I was unmute myself. I was checking and seeing. I thought somebody else was not muted. So there's asking, are you a direct lender or are you a broker for other lenders, or how is that?
Yeah, so we're a direct lender, so balance sheet our loans. You know, everybody winds up trying to sell their loans to a bigger fish, you know, in the pond, right? We are one of those scenarios where we'll balance sheet our loans and we'll sell them off eventually when, you know, the conditions are correct. So yes, we are a direct lender in that sense.
Okay, and is there a penalty for paying the loan off early?
So that's a good question too. So on our DSCR loans, we do have a standard 5-year prepayment penalty. This is really just so that, you know, a lender could, I guess, theoretically try to make as much money on the loan as possible. If you were to sell or refinance the loan within the first year, it would just be a 5% penalty on the total loan amount that you would get from the beginning. It kind of decreases as the years go on, so 4% in year 2, 3% year 3, all the way down to none. We do have some flexibility in that regard of being able to change the prepayment penalties. We have a 3-year, a 2-year, a 1 and a no option. The interest rate just does go up in that effect. So that's on the DSCR side. On the fix and flip side, we do not have any prepayment penalties on any of our rehab loans. So once the renovations are completed and you have a tenant in place, then we can start on the refinance process pretty much straight away.
And then how long are your loan terms?
So DSCR loans, so for purchases, refinances for rent-ready properties, we have 30-year terms. And then on the fix and flip side or renovation side, also on the ground up side as well, they're 12 months, and they're only paying the interest on the drawn amount. So, you know, if you were to get a renovation budget, anything that you're drawing out of that renovation budget escrow when the loan closes is the interest that you're going to be charged on that monthly basis.
Gotcha. Okay, awesome. And do you require any account balance or minimum cash reserves?
Yeah, good question there too. So on the DSCR loans, if you're purchasing a property, as long as the person credit qualifies, you know, let's say 700 plus, the property has a debt service coverage ratio of 1.0 and above, the minimum down payment that we have in that regard is 20%. So we need at least a 20% down payment on the property itself, and then plus any kind of reserves and closing costs associated with the loan. And any kind of term sheet that we give out to our borrowers pretty much have all of this stuff outlined, so that this way you see it, you know, firsthand. So this way there's no like guessing or, you know, any kind of surprises coming on down the line. So on DSCR purchases, need to have enough for down payment, need to have enough for any kind of reserves or closing costs. On the fix and flip side, we also need as much for the down payment, any kind of interest only reserves, and then also just have to show at least 30% of the renovation budget, just to make sure that you can pay for at least the first draw or the first, you know, set of renovation that you're going to be able to do. It's kind of just like a just in case. So hopefully that answers the question there.
Yeah, you're doing good. I'm going from what the group is asking. And is there, and I'm pretty sure this is probably on a fix and flip loan, is there a penalty if they exceed the term of that type of loan?
Good question too. So all of our fix and flip loans are 12 months in nature, right? If someone were to want to extend, they can extend 3 months at a clip. They can go up to a maximum of 18 months. If they needed that extra time, you know, I've seen some unforeseen circumstances where, you know, people need a little bit of extra time. Hopefully that gives them a little bit of flexibility there. But the hope and the goal is that somebody would be able to get some sort of renovation loan done within that first 12 months, or at least so that they can refinance into a long-term option or flip the property, depending on what their exit strategy is.
Gotcha. And how do you disperse the funds during those different renovations?
So we do it through a draw process. So essentially what will happen is one of when you start the renovation style loan, you're going to fill out, or the borrower or the general contractor, whomever it is, that's kind of in charge of the project, is going to fill out a scope of work template. And essentially what's going to happen is that scope of work template is going to be included in an appraisal, so that this way the appraiser knows where the work is being completed and how to assign an after repair value. That pretty much should kind of coincide with the projections that a borrower might have. After the loan closes, that renovation money is going to sit in an escrow account. And what's going to happen is once a borrower completes a set of work, what they can do is reach out to me. There's just a little bit of paperwork that they just need to fill out for a draw request. We send it into our inspection company, which is a third party. They go out to the property, they inspect, they take a look at the work that's done line item by line item on the scope of work, and then they'll assign a completion percentage to each line item, and they'll send it back to us, which will then be able to tell us how much of the project is at completion percentages, which in turn will allow us to be able to wire the funds back to them until that escrow account is at nothing.
Gotcha. And someone has asked, do you provide the scope of work template to plug those numbers in for submission, or is there something required for that?
Yeah, so we have our own scope of work template that we would have our borrowers fill out, so that this way we can include it with an appraisal. I have had borrowers fill out their own scope of work templates as well. We might have to just transfer it over to our own formatting, but there are some scope of work templates out there that are a little bit more detailed in that sense. So you could use your own. I would just highly suggest being able to use ours. It might just make things a lot easier. But yes, to answer your question, we do have our own scope of work template in order to use for that.
Gotcha, thank you. And is there a minimum FICO score that you require? A minimum credit score?
Yeah, good question there too. So minimum on the DSCR loans, we can go as low as 660. However, there is a cap on the loan to value that one could get. Usually it's capped at 70%. On the fix and flip or fix and hold side, we can go as low as 620, so long as there's no negative credit history, so no mortgage lates, no serious credit card lates. So we can go as low as 620 on the fix and flip side. And when I say fix and flip too, I kind of say it synonymously with like fix and hold or BRRRR strategy. So I just want to make that known to everybody as well. The only difference between any of those is just the exit strategy.
Yeah. So is there, or I should say, is there, or what is the application fee, and are there any other fees that you charge for the loan?
Good question.
Points or things like that?
Yeah, absolutely. So we don't have an application fee. The only two things that we have up front for our borrowers would be a credit and background fee, which is basically just to double check and make sure that the credit is where it says that it was, and that there's no liens or judgments against you on your background report. It's usually about $99. And then we have an appraisal fee. Usually runs between $650 to $850. We use an AMC. They're spread out across the country, so it's kind of just dependent on what they charge. So those are the two up front. The ones that we have on the back end are any points that we charge in origination. Kind of depends on the deal itself, but also it kind of depends on relationship with the borrower. So there's a couple of different factors that really go into something like that. So origination is one, and then we have a lender processing and legal fee, and it's kind of coupled together. Those two things coupled together is about $2,200. But that's on the back end. So, and you would see any of that kind of outlined on a term sheet, so that this way you would know, again, exactly what you would be getting yourself into, and that there's no surprises.
All right, I think I've got all the questions in the chat. Does somebody have some other questions? I know we've covered quite a lot. Does anyone have other questions? Okay, so from receiving the application, how long does it take to the disbursement of funds for I'm thinking for a fix and flip type thing?
Yeah,
when
so
you're fixing something.
So 21 to 28 days, around that time frame from start of application to getting to the closing table. signing on the dotted line and, dispersing the funds to purchase the property in that sense, or even refinance, right? It's around that 21 to 28 day time frame. Now, if we're talking about, I guess, on the fix and flip side of things, when you're trying to look for a draw,
Right, that's what they're talking about, is a draw.
So usually about, let's say 48 to 72 hours would be a good healthy estimate there. Once we get the draw inspection from the borrower, we send that in immediately. Ultimately, they're going to reach out and schedule the inspection with the borrower. They'll try to get out next day or the day after that in order to inspect the property. And then ultimately after that, as soon as we get that inspection report back and they are reviewed and we can see how much we can disperse of the funds for that specific draw, then that would just happen after that. So longest that I've seen is about a week, but usually it would be about that 2 to 3 day period.
Gotcha. Good. All right. And where do you lend? Do you lend regionally and nationwide, or what states?
Yeah, everywhere, except for the Dakotas, Utah, and Vermont. And then we also just don't do any kind of rural areas. So those are the only 4 states that we can't touch, and then no rural. As far as, I guess, some hotspots that people have been, kind of looking at as of late, the Midwest region of the Ohio's and Indiana has been a very, very good area to take a look at. Very low taxes, the properties cash flow usually very well out there. And then also in the areas that, you guys invest in as well, Virginia, Florida, you really just have to find places that have a higher rental income and places that have a little bit lower on the taxes side, because sometimes taxes and any kind of HOAs are the ones that really drive that DSCR ratio down.
Right. Thank you, Dominic.
Did you want to say a question, Rick?
No, I can't talk anymore. Sorry, Dominic.
Just
It's
move
okay,
yourself.
Rick.
Okay. I've been asking him all the questions that come through. So, all right. I was just actually going to ask a question and then I forgot. Okay, so does anyone else have other questions that they would like to ask while I'm thinking?
And also, if you guys can't think of any, now I can certainly put my email and my cell phone in the chat, before we hop off here, so that if something pops up that, you can't think of right now, you can certainly reach out to me. Be more than happy to help.
We've actually added it, and I'll send it out in
Okay,
the
perfect,
email
even
for
better.
the recording also.
Perfect.
So, gotcha. Well, are there any last thoughts or any things that you'd like to sum up to tell everyone?
I mean, I just want to say thank you again for, allowing me to, speak to everybody. There's always a first time for everything, right? You just want to get and jump in. Surround yourself with people that are going to make yourself better, right? Get yourself a good team, contractor, realtor, lender, accountant, all of that good stuff. Try to make sure that you have at least that core of people around you first, before you kind of just start going in and start offering on properties, or before you just go run the numbers on something. You want to make sure that something makes sense, and that you have a good group of people around you before you really just kind of get into everything. But don't be scared to do it though either. So just, I guess, a little tidbit of information there.
No, that's golden advice. Definitely. That's a great way to close. I mean, as long as, if anyone has any last questions, we did put your information in the chat again. And like I said, I'm going to send it out when I send out the recording. And I do want to let everybody know, like I said, our next online meeting is going to be in January because of the holidays and the way they fall this year. And our next Virginia in-person meeting is actually also going to be in January. So the in-person networking happens on the third Thursday of the month. Yes, and no, the fourth Thursday of the month. So that one's on January 25th, and the online is the second Thursday. So the second and fourth Thursdays. And so that next one is on the 11th. So does anyone have any final questions for Dominic? All right.
I promise I don't bite.
Thank you, Dominic.
Thank you
guys. I
so much,
appreciate it again.
Dominic. We totally appreciate you. Oh, there's great jobs going on in the chat, so we definitely
thank you.
appreciate you. And we will be, I'll be sending this out to the group. We've got over 500 members in our group, so it'll definitely go out, and we'll see if you can help us and we help you in the
Awesome,
future.
guys. I really appreciate it. Thank you so much.
Thank you so much.
We'll talk to
Thank you.
everybody soon, all right?
All right. Thanks, Dominic.
Thank
Thanks,
you.
guys.
Good night. Talk to
Good
you
night.
later.
Bye.